Hello, everyone. Welcome to my channel. I'm here with my good friend Michele Condon. I'm Ryan with Arisumi Financial, and I saw some of your videos on TikTok talking about mortgage protection insurance, and it dawned on me like not a lot of people know about that. Like because mortgage insurance protects the lender, but it doesn't protect the homeowner, and in most cases the lender's covered, but if something happens to the homeowner, like they're pretty much, you know, up the creek without a paddle, right? So, anyways, I thank you for coming, joining me today, and picking your brain a little bit, about this mortgage protection insurance. So yeah, tell me what you've been up to and what's been going on.
Man, listen, Ryan, thank you so much for having me. I have dubbed myself the finance comedian, right? Because it's nothing funny about not having no money or protection, right? And so, I've been a real estate agent for over 15 years. And, a lot of people, when they go get these new homes, they saving up they last. Like they packing brown paper bag lunches to be able to save up for that down payment. But a lot of people don't get over that 20% down threshold. So what does that mean? That means that you got to pay PMI, which is private mortgage insurance, right? But that is to cover the lender just in case you default, right? But then I was thinking about it, right? When I stepped up my game and I got into the financial industry and I learned about mortgage protection, I'm like, okay, if you own a home, more than anything, you paying insurance, you paying this PMI, you got your homeowner's insurance. But what about the insurance that covers you? Let's keep it real, man. 30 years is a long time to be paying on a mortgage. Most
Definitely.
people is typically like 30, 40 years old when they get their mortgage. You know what I'm saying? So 30 years, you starting at 30, you're going to end up 60. A lot could happen by the time you're 60. Starting at 40, you end up at 70. A lot can happen, right? You know what I'm saying? The
Right.
older we get, the more at risk we get for heart attacks, cancer, stroke. And I'm just being frank. I'm keeping it real, right? So guess what? What happens if something jumps off in our health? Guess what? The lender, oh, well, what are we going to do? Call the lender up and say, hey, Chase Bank, I had a heart attack yesterday. So, I'm not going to be able to go to work, which means I'm not going to be able to get the money to pay the mortgage. Can you give me a pass? You guys want to know what Chase Bank is going to say? They're going to say, oh my gosh, I'm so sorry, Jim. Jim, I hate to hear that. Oh, I'm going to go ahead and transfer you to the loss mitigation department because your house will be going into foreclosure, right? So I had to think of something like, how can we prevent that? And that's where mortgage protection insurance for you, the homeowner, comes in. People don't understand this, but life insurance is powerful. You just got to know how to leverage it.
hmm Yeah, I remember when I was growing up, like life insurance agents would call me, and I'm like, don't answer the phone. I'll just hang up on them. But as I got to learn more about it, it's such a underutilized tool, in not just the death benefit aspect, but the wealth planning and retirement planning, and it's such a, like I said, an underutilized tool. And there's so many different life insurance products out there, and there's so many different strategies that you can use these life insurance products. Um, and don't you do like that kind of stuff as well, not just with the mortgage protection? Don't you do like retirement planning and helping people, making sure they're, if they want to build wealth and how to utilize those life insurance products? You do something with that, right?
Oh, listen, what I realize is those old school insurance men that used to knock on the door, man, they got one product and they got one motive. They just try to make sure you get a small little death benefit. You know what I'm saying?
Mm.
And you got to understand, the wealthy have been utilizing life insurance for years, cash value life insurance for years. How do you think Walt Disney started Disneyland? Nobody was trying to finance this fairy tale land that all the kids and parents was going to run to. Nobody believed in that. So when nobody believed in his dream, guess what? He had a cash value life insurance policy to pull from where he was able to finance himself, right? I know whichever bank turned him down, they was mad they didn't invest in Disneyland.
Right.
That's when you talk about generational wealth. He created generational wealth. You know what I'm saying? Like
Mhm.
his family gonna be covered for life, but it started with him covering his life, right? getting that life insurance, but he utilized one of the functions. There's four functions of life insurance. Yeah, we all know about, the death benefit, but now life insurance has living benefits. In the event you end up critically, chronically, or terminally ill, you're going to get a large portion of your death benefit, right? While you living. That's the game changer. That means that everybody and their mama need life insurance now, right? Then the next function is, right, cash accumulation. I tell people, you got a savings account attached to your life insurance policy. If you don't save nowhere else, as long as you're paying that monthly premium on your life insurance, a part of it's going to go to cover that life insurance death benefit and them living benefits. But the other part is going to be a savings account for you. And that goes into the next function, which would be a tax-free stream of income to pay you for the rest of your life. I call it the gift that keeps on giving, but you got to use it the right way. You can't put $2 in there and think you're going to pull out 2 million. You know what I'm saying? That's why you got to sit down with somebody like me to really help you, cultivate, create, and plan and map out the perfect strategy for you to reach all your goals with life insurance. You know what I'm saying? Walt Disney ain't got to be the only one out here making multi-bazillion dollar businesses by leveraging life insurance. You can make some of your dreams come true too,
Right.
Oh, wait. And the last function I wanted to tell you about, because you mentioned it, was the wealth transfer. Life insurance is the number one vehicle for a person with a little bit of money to leave a lot of money to the next generation. I got my son, he's 2 years old now, but ever since he was a couple months old, he had a policy. I call it the $1 Million Baby Policy. This policy is set up where my grandkids, my son too, but my grandkids is going to get millions because of what I'm doing right now. You understand what I'm saying? So listen, you got to know how to change the game for the trajectory of your whole family to come. The greats, they're going to have a gold statue of me at the big family house because of all the stuff that I'm doing to create generational wealth with life insurance. But that could be you too. You just got to tap in with me so I can give you these tools, man.
That's awesome. And yeah, as I figured out, or not figured out, but as I learned about, also those four functions, it's kind of like, wow, that blew my mind. But anyways, I want to thank you for joining me today. I know it's a busy Saturday for you, but guys, if you're watching, check out her TikTok. She's at the Finance Comedian on TikTok. I'm gonna post a link in the description below, and there's probably gonna be a video pop up showing her TikTok page. But anyways, thanks, Michelle, and yeah, if you like what you saw, don't forget to smash the like button and hit the subscribe. And don't forget the bell notifications for when I post new videos.
Thank you for having me. I really appreciate you.